We can start. Ashika?
Yes, sir.
Yeah, you may please start.
Yes. Good morning, everyone. Today, my topic given to me is taxability on sale of self-generated electricity to tenants. Now, before moving or jumping into the taxability of it, I would first like to discuss about the electricity related service categories which are present under GST rate notification. So, under GST, supply has been given a very wider definition. So anything which is supply from one person to another is taxable. And for the purpose of determining whether a particular supply is taxable or not, we refer to a rate notifications which has been issued under section 9 for the purpose of GST rate applicability and section 11 for the purpose of exemption. Now, when we go through the rate notification, for the purpose of supply of electricity energy, there is a specifically exemption has been provided, and it has been provided that in case of supply of electrical energy, there is no GST. So for goods, it is not taxable. Now, when it comes to service side, there is also a specific exemption in case of electricity for electricity transmission or electricity distribution service. But when we see the exemption part of electricity transmission or distribution, it is not a straight jacket exemption. Exemption is only when the same is been provided, which has been authorized under Electricity Act. If they have been provided by electricity transmission and distribution utility, which are notified under Electricity Act, or which are the distribution or transmission line under the SEC Act. So Act provide where you can obtain those license and accordingly do the distribution and transmission. Only when you are covered under that, under Electricity Act, you are authorized, then only you will be exempt. You will be exempted, otherwise it is taxable. Another category which has been is there is support service to electricity transmission and distribution. If any support has been provided for electricity transmission and distribution, then there is no exemption. It is straightforward taxable at the rate of 18%. Now, transmission and distribution, we see that it is linked with Electricity Act. Because in section 12 of Electricity Act also, it has been specifically provided that no person shall transmit electricity, distribute electricity, or there is one more thing added in under Electricity Act is undertake trading in electricity unless he is authorized to do so by a license issue under section 14 or is exempted under section 30. So transmission and distribution, it's okay if you qualified under Electricity Act, then only you are exempted. But when we comes to the trading part, though in this it has been specifically provided that for purpose of trading in electricity also you should be authorized. But when we read the notification 2 which provide for exemption, in that, like for service exemption, there is no such condition in case of supply of electricity, that for trading also, if it is done by authorized, then only it will be exempted, otherwise not. There is no such condition in rate notification linking with Electricity Act. However, in the case of Seagen Realty Private Limited, where the Calcutta High Court held that if you are not authorized under electricity, you will not be qualifying as a distribution, selling, or trading in electricity. And therefore, what activity you are carried out in relation to electricity will qualified as service, and you will be liable to pay tax on the same. Though this relates to service tax regime, and further in this, they have also referred to Electricity Act definition to determine the applicability, but however, they haven't discussed in this case because law specifically provide when any person do anything without the authorization under Electricity Act, they have specifically prescribed for penalties. So what would be the situation even though trading is done without authorization and penalty is paid under Electricity Act? Then what would be the situation is not discussed over here. Another thing I notice is that under Electricity Act, they have defined two things. One is supply, one is trading. When they define trading, they only means purchase of electricity for the purpose of resale thereof. So it is purchase and sale. But when we come to supply definition, it is sale of electricity to licensee or consumer. So means self-generated electricity, which is being generated. It's not like a trading. So when we are self-generating electricity and then it is supplying, it will not fall under section 12 because section 12 of electricity is specifically dealing with trading in electricity. Self-generated electricity supply to the other person will not be regarded as trading. Therefore, there is no violation of Electricity Act. And that supply of electricity, I can set it to be electrical energy supply, keeping in line the Electricity Act under notification 2 and therefore exempted. Now, when the things will be regarded as supply is also mentioned in the Act, Electricity Act, they are saying, like where there is a generating companies, like the companies who have entered into wheeling and banking agreement with electricity. So even without obtaining license, they can generate the electricity and supply this electricity to the consumers. Then another one was hydroelectric generation. Though over there they are saying no, not required obtaining license, but they have given multiple things, rules and regulations they need to do in order to procure the permission for hydroelectric generation. Another one is captive generation. So if like solar rooftop, so now most of the companies, they are taking solar rooftop, entering into an agreement with BESCOM for the purpose of solar rooftop electricity generation, where they generate the electricity for captive generation, means the property which is let out to the tenants. Now in this, when it is procured even for captive generation, in Electricity Act, it is said that there is no need for license for supplying of electricity to any licensee in accordance with the provision of this Act, rules and regulation, and to any consumer subject to the regulation made under subsection 2 of 42. Section 42 only prescribe about the charges with the state board will levy for the purpose of using their open access line, transmission line. So even in case of captive generating plan, where the electricity is generated and being given to the tenants and tenants or occupier, at that time also, we don't need authority under the license under electricity, and that will qualify as supply. And therefore, being a supply of electricity, GST should not be, in my opinion, GST should not be levied on the same. So with this background of Electricity Act, further in Electricity Act, there is one more thing provided is even the consumer can enter into an agreement for supply or purchase of electricity. It's not that he has to income with BESCOM or distribution or transmission line. It can enter into with any other person, and based on that agreed terms, whichever they agree, they can execute. So as supply and trading, there are two different things have been provided under electricity. Therefore, the supply, that is self-generating electricity by the landlords, will not be considered as a violation of Electricity Act, and therefore by going by GST rate notification, it should be exempted. Now, with this background, I would like to move into some concept before moving forward. Is there is a difference between when we say supply of electricity and provision of electricity. When we say supply of electricity, we are saying that a person is engaged in providing you the electricity. And when provision, where there are connections are there, which is where the electricity is being provided by BESCOM to the ultimate consumer. So for this, I would like to take through the agreements. Like one of this agreement is, this is a rental agreement, and this clause is specifically in relation to power and backup.
Ashika, we are unable to see the agreement copy. Only your PowerPoint is visible.
1 minute. Now, sir.
Yeah, visible.
1 minute. So this is also this is a rental agreement where this is a specific clause for power and power backup. Now over here it is mentioned that the lessor hereby agree and confirm to lessee that scheduled premises has a fixed 428 kVA of power through BESCOM, and in the event lessee required any additional power, the lessor will make available the same to the lessee, subject to the availability of power at a cost of rupees this for power through BESCOM and rupees this for generator power, 50% of which is refundable. Shall pay a refundable security deposit towards such additional power requirement to BESCOM as per BESCOM requirement, and the lessor will be required to refund 100% of deposit paid to BESCOM to lessee at the time of termination of this lease deed. The lessee has informed that lessee that BESCOM will be providing single meter to the whole building, and lessee is in the possession of entire scheduled premises and will pay directly to BESCOM, and the lessor has paid security deposit with BESCOM for installation of main meter. Any interest by BESCOM pertaining to the security deposit would be passed to the lessor. So in this agreement over here, there is a provision of electricity where electricity will be supplied by a BESCOM. So this part of the clause shows that there is a provision of electricity, not supply of electricity by the landlord to the tenant. But when we compare with the other agreement, this is another agreement sample. Over here, the lessor shall provide power at the rate of 0.7 kVA to 1 kVA for every 100 square feet of demised premises, including HVAC load. Lessees shall pay the consumption as per the reading on submeter installed by the lessor in respect of demised premise, and the lessee shall be responsible for payment of the demand and consumption charges payable periodical as per local electricity board tariff to maintenance service provider for handover date. And lessor shall provide 100% power backup for the demised premises 24 hours a day, all the day of the week throughout the year, subject to scheduled maintenance and repairs. Now, in this, as per this agreement, the lessor is responsible for providing the power. So I basically want to bring out the distinction between over here, it is a supply of electricity, and over there in this agreement is only provision for electricity. Now, why I want to bring this distinction is when there is a supply of electricity, is the concept will come of supply, sale of goods. But when there is a provision of electricity, the service concept will come into the picture. Plus, when there is a this clause of agreement will also help in determining, once we have identified whether it's a supply of electricity or provision of electricity, whether it's a goods or services, accordingly the GST rate will be applicable. When it's a good, no GST, it's exempt. But when it's a service, now the concept of whether it is can be regarded as incidental expense, composite supply, bundle service or not, that need to be checked into. So like over here in this agreement, over here, for lesser, it is not an incidental expense which is to be incurred by the lessor. This is the expense which is being cast upon the lessee. Lessee has to bear the cost and pay it directly to the BESCOM. Being in that nature, it will not call as incidental expense, and therefore it will not form part of the value and GST will not be applicable. However, in case, now taking one more agreement copy where incidental expense is involved, in this case, lessee shall pay electricity charges on actual basis based on meter reading at the rate charged by electricity board without any markup, and no panel charges shall be payable if the charges are levied due to default of lessor. Backup charges will be payable by lessee as per meter reading based on actual diesel cost. The lessor have agreed to provide HVAC facility charge measurable at 1 ton for 180 square feet of the said premises on all day operation of demise premise without any default during entire term of the lease, subject to lessor providing HVAC service agree to pay the actual basis on meter reading. So in this case, over here, lessor is responsible to charge electricity from the lessee and then pay it to the electricity board. So in this case, it has become an incidental expense to the service provided by the lessor, and accordingly, it will form part of the value. So while there can, so based on the agreement, the terms which has been entered, we have to determine whether it's a supply of electricity or provision of electricity. If it is a provision of electricity, whether it can be regarded as incidental supply or it will be regarded as a composite supply, or there may be a case where the separate agreement has been entered for the purpose of supply of electricity. If there is a separate agreement for the purpose of self-generated electricity, then there will be a two separate contract and it cannot be regarded as a composite supply because there is not a supply is involved there. So being a two separate supply, so sale of electricity will be chargeable at nil rate and service provided by way of renting of immovable property will be taxable at 18%. So this was for supply of electricity, incidental and separate supply. Now with this, we'll be moving to the circular reimbursement of electricity, circular 206, which is recently issued, where they have given a two scenario. One scenario where they are saying GST applicable, and another scenario where saying GST not applicable. So at GST applicable, they are saying when supply of electricity as a part of renting of immovable property, then it will be considered as ancillary service, irrespective of the fact whether there is a common billing or a separate billing. So the agreement which we discuss, over here, now this is a rental agreement where I went through only specific electricity clause just for dividing when it will be regarded as supply of electricity and provision of electricity, provision for electricity. Now, as it is a part of rental agreement, where the lessor has also the responsibility to provide the services, provide the electricity also, in this scenario, it will become a part of a bundle services, and therefore GST will be leviable on the same, irrespective of the fact whether it is charged on an actual basis or not, because over here the purpose is not in the nature of reimbursement, it is for the purpose of providing electricity. Therefore, it will be regarded as a composite supply and tax will be leviable. Now the second part, which deals with GST not applicable, if electricity is supplied as a pure agent or electricity is charged on an actual basis from lessee or occupant. So pure agent conditions are difficult to fulfill in electricity reimbursement of electricity, as the electricity bills are always in the name of landlord, mostly in the name of landlord, and therefore the title of goods or services cannot be said to be in the name of tenant. However, I find out that it can be disputed that because title of electricity is never transferred, even though as a consumer only we are given to use the electricity. We don't have the power to further transfer this electricity. So, though that's I think so in that case also pure agent can, means pure agent full titling goods can also be comply. But if electricity is supplied as a pure agent or electricity is charged on actual basis from lessee. So irrespective of the fact whether all the condition of pure agent is satisfied or not, if it is charged on actual basis, then there will be no GST on it. That is what they are saying. So basically, if I see the circular, first part is dealing with the composite supply, and the second part is dealing with the reimbursement of expense. So if it's formed as a composite supply, then you have to pay tax on the same. But if it is falling as a reimbursement, because only in case if it is an incidental expense, then only your rule 33 will kicks in, and then only you will be eligible for exclusion of the value. So I think this is what the circular is trying to distinguish between the two and saying about the GST applicability on the same. Now, one more part is that though in circular it is mentioned that it doesn't matter whether you are billing separately or making a common bill is immaterial. However, earlier also they have issued one circular, not on electricity, but it is on service of goods in case of car servicing, where they have said if you are issuing two separate invoice for goods or services, goods will be taxable as per the rates of goods and service will be taxable at the rate of service. Though I think so. Separate invoicing will not determine the rates. It's the contract, the main contract, whether the contract is a composite supply or not, that need to be checked in order to determine what's the GST rate applicable. However, this I just have kept here for the purpose of comparison between the circulars. Now, in this, I want to add further in this, like over here, which the scenario I was discussing of one case, power and power backup. Now, over here, the lessee shall provide power. Over here, it is mentioned BESCOM, self-generated or renewable power. Now, in this case, company has entered into an agreement with electricity board for the purpose of wheeling and banking agreement it is, where they have installed a solar power and whatever energy is being generated in solar power will be transmitted, will be used by the tenant. Whatever they can consume, they will consume. And then if extra is there, if it is transferred to the grid of the electricity board. So over here, as we discuss Electricity Act part, over here they have company desire to build up 1.5 megawatt of power generated from the project for its captive use or to sale to third party utilizing the transmission and distribution network of the corporation or BESCOM. So over here, they can use for captive and they can also sell to third party. However, when the billing happened at the end of the BESCOM, it happened on a net metering basis. So maybe total consumption may be 1 lakh. Out of that total consumption, the electricity which is produced over here may be 30,000. So when the BESCOM raised bill on net metering, it raised bill on 1 lakh minus 30,000. On 70,000, it raised invoice and sent to the consumer. Now, when the consumer, being a landlord, when they raised a bill to their tenant, they are obviously going to raise on total 1 lakh unit which is consumed. Now, the question which arises, this 1 lakh unit have two components. One is self-generated units of 30K and one is the 70,000 unit which is actually consumed from BESCOM by the tenant. How that should be built? Because when if I go with the agreement over here, I am required to provide this electricity supply to my tenants. So for that, it became a composite supply, and even on that 1 lakh units also, I need to charge GST at the rate of 18%, which is applicable. But keeping this aside agreement for one moment and just focusing on the part of 1 lakh where 30,000 is the self-generated and 70,000 is the BESCOM electricity. In such a scenario, if I go by circular and go on an actual basis part, obviously companies are charging based on electricity rate which BESCOM is charging to them. So they are collecting as per the rates applicable from their tenant on 1 lakh units. Now that 1 lakh unit have two components. If I go by reimbursement on actual basis, that 30,000 will not qualify as reimbursement on actual basis, because that is I am collecting in excess of what BESCOM has charged, resulting in non-applicability of that circular, and I can't take that benefit. And I feel that on 1 lakh unit, we need to pay GST on the same, because there will be obviously over an actual collection on of what has been actually paid to the BESCOM. 1 minute. Please. This is the electricity bill, where actual unit consume is 8,39,000. Actual unit consume is 8,39,000.
Can you just highlight that, which portion? Yeah, okay, I can see that, yeah.
Actual unit over here consume is 8,39,000, but net consumption, this is based on net metering, which has happened is 1,09,000. Based on 1,09,000 net meter, energy charges has been charged by electricity board. This is the amount. Now, when we so this is how the electricity board has charges the electricity. Now this differential of 8,39,000 and 1 lakh, which is self-generated electricity. Now for this solar, all the cost relating to solar has been incurred by landlord, and obviously they don't pass on that electricity credit to their tenants. They will be charging based on 8,39,000 only to their tenant based on the submeter install and based on the rates given by the electricity board in this invoice. Now, if we come to that circular part, over there, they are saying the same amount of actual electricity charges. Now, if we see the actual electricity charges may be this based on net metering. However, the amount which is charged from their tenant is much higher based on total unit consumed. Therefore, that circular actual basis will not be getting qualified over here. And on 8,39,000, even though charge on the base of rates prescribed under Electricity Act, I feel that electricity GST will be applicable. Being a composite supply, SSE need to pay tax on the same. So even here, self-generated electricity will also get taxable. Further, also they haven't clarified what about the generator sets. Same self-generated electricity it will be. And if we go by Electricity Act, all self-generated electricity, you need to pay electricity duty on the same. So for Electricity Act, it is an electricity, supply of electricity. But for determining the taxability under GST, we have to see first whether it's a separate supply or a composite supply, or it is will be a incidental expense. Based on that, even though separately electricity is not taxable, but based on composite supply or due to valuation, GST may even come for electricity. And this circular where it is said on actual basis may fail in case of self-generated electricity. In this circular, few points have not been clarified. The circular create more ambiguity instead of clarifying the issue. It create a deeming fiction in case of reimbursement on actual basis. So any reimbursement, if made on actual basis, can it be said that you are not liable to pay tax on the same even though pure agent condition is not satisfied? What is regarded as actual basis? Like we discuss about self-generated. So because if that self-generated was not there, person will be paying on 1 lakh unit based on what electricity has been charged. Just because it is self-generated, that actual basis will not be qualified and therefore tax should be levied. But however, in the circular, nothing has been discussed about the scope of it. It also does not clarify about the different fact, what would happen in what different situations. And there is also no guidance when we should regard as bundle service or incidental. Because if it is a bundle, obviously Rule 33 will not kick in, and therefore there will be no valuation exclusion. But if it is incidental, then we have to see by way of Rule 33 whether we will be there for exclusion and GST will not be applicable on the same. So this is all from my side for self-generated electricity.
Ashika, I have a question. When you say there is a levy, in case of self-generated, it would be treated as supply of goods or supply of service?
Sir, that will depend.
No, that's the example that you have shown where that 8 lakh consumption, 1 lakh billed.
Yes, sir.
Yeah, in this situation where the landlord is collecting the money.
Yes,
what,
sir. In this, as per agreement, this is same agreement for that party only, means that landlord only who has obtained. So as per the agreement, they are required to provide power. BESCOM, self-generated, renewable, whatever may be. Agreement is entered for providing power. So as it is a part of rental agreement, I am saying it should, based on this agreement, it should be qualified as a composite supply and GST will be applicable. So based on the agreements and terming, it will be determined whether it will be qualified as goods or service, whether it will be a composite supply or incidental expense.
So in the current situation, you are saying that it should be charged as renting.
Yes, sir. I'm saying it should be charged at the rate of 18% being a part of composite supply.
Okay, so though not directly connected, given that considering that if the solar panels are not treated as immovable property, since it is used in the course of providing a taxable supply, ITC thereon should also be made available, which otherwise if one subjects it as an exempt supply as a separate levy, ITC would not be available.
Yes, sir. Thank you.
Okay. Jatin sir, Raja sir.
ಒಂದು ನಿಮಿಷ ಇವಾಗ ಮೇಡಮ್
Ashika.
Yes, sir.
see what has been done here is you have come to one conclusion that this circular is useless, right or wrong? Did I
Yes,
understand
sir.
you correctly?
Yes, sir.
So circular कोई काम का नहीं है, we will leave circular, okay ना?
Okay, sir.
Totally useless it is, it does not give any clarity, nothing it gives, so throw this as circular aside. Suitcase circular.
Yes, sir.
Okay, now we'll go back to your PowerPoint. What you are saying, trading is different from supply, supply is different from trading. You have created one new Archimedes principle. You have invented something to prove your theory. Okay, na?
Sir,
No, no, you have invented some theory that supply is different from trading, and therefore you can sell electricity as you like. See, we have to keep in mind that nobody can supply electricity without being a licensee. Agreed? You have to please
Sir-
correct me if I'm making mistake in the basic fundamentals.
Sir,
Electricity cannot be supplied by anybody without a license to supply electricity.
sir, it's supply part. When I
Okay.
read the Electricity Act,
No, Electricity Act only I'm talking about.
sir, in supply part, when I read, I find this three section 7, 8, and 9, where they are saying about even without license, you can supply electricity.
Show me that portion. Ma.
So you want to see Bare Act?
No. Here screen only you show all of us where it says without license you can supply. A generating company, are we a generating company? See,
Uh,
here, no, 1 minute, I'll tell you, we have to read the language here. Any generating company may establish, operate, and maintain a generating station without obtaining a license under this act if it is the technical standards related to connectivity with the grid under 73B. So this is talking about a generating company. Are you a generating company? See, we have to understand 2003, there was a major overhaul of the entire electricity distribution system in the country where they separated transmission distribution entities from generating entities.
yes, sir.
Wherever government has a generating company in a, let us say, in a, where they have a dam, or they have thermal power plant, generating companies. We cannot take two words from different sections and assemble our own Tesla car. We have to go to the embargo in section 12. Nobody without a license is permitted to be in the electricity business. Who will be given license? All DISCOMs, distribution companies, are given a license, and all independent power producers are given a license. Can we agree on that?
Sir, one thing.
12. Yes, please.
Sir, over here in
The
section,
captive will come to know. Captive will come to.
and,
Captive will come to.
okay, sir, but when we read over here,
Again,
there's
tell me.
undertaking, trading, it is mentioned separately,
One
sir.
So trading
So-
is Karnataka buying electricity from Tamil Nadu, not Ashika selling electricity to Venugopal. Madam, we have to understand the physics of electricity. Electricity is basically what? Potential difference. You
Hmm.
cannot capture it anywhere and keep it. You understand?
Yes, sir.
If you produce more electricity, it has to be evacuated into the grid. It cannot be kept in somebody's godown. Electricity behaves differently from stock in trade. Although accountancy will simplify everything into stock in trade or fixed asset. We have to go and make this, we have to agree on the principle in section 12. Okay, na?
Yes, sir.
So all these new rules you are invented are not agreeable. Next, we will go to the second part where you showed various agreements that a landlord has obligation to provide electricity. When he has obligation to supply electricity, then of course he has to supply electricity. No. Tomorrow, landlord will enter into agreement with the tenant to supply uranium-235. See, what the law prohibits you from doing, you cannot enter into a contract and do it. You understand? So
Yes.
all those clauses in agreements where it says owner will sell electricity to tenant are contrary to section 12 of Electricity Act 2003. So those clauses have to be severed from those agreements. Unenforceable clauses cannot survive when those clauses are contrary to the law. Okay, no?
Yes, sir.
So now we will see, if nobody can sell electricity, how you are taking exemption from selling electricity. The only situation that will arise will be captive and this net metering which you talked about. The third part we should talk about, landlord and tenant business. See, in a captive plant, you produce, you consume, because the states are in a power deficit. There are
Yes.
relaxations provided in SEZ, etc., 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 or IT parks, industrial parks, saying that instead of everybody setting up their own generating plant, the developer of the park can set up the plant and fulfill the requirements of all the tenants in that building without causing a burden to the grid. There is already deficit of power in the grid. Now, if you ask for permission that, for example, this happens many times, you're constructing a very big apartment, government gives you building sanction, but they say water we will not supply. So then the builder says, I cannot do the project without water. So the plan sanctioning authority says, I will give you conditional sanction. If you are able to find your own source of water, then you can proceed with the construction. Builder says, I will dig bore well, I will pay the water mafia in Bangalore and purchase water regularly. I will not depend on the grid for first 10 years. Then Kaveri connection will be given. So therefore, we have to keep in mind that when the developer of an IT park sets up a power plant, whether diesel based or solar based or combination of that, and fulfills the obligation towards tenant, he is not selling power, he is amortizing cost of running the plant. You understand?
Yes, sir.
Depreciation on a bus can be computed as per passenger per kilometer basis also. Although depreciation is on a time basis, it can be converted into per passenger per kilometer basis also. If you're transporting granite from Kerala to Delhi, the transporter will quote per ton per kilometer rate. How much ever is the quantity per ton per kilometer, open carriage allowed, open carriage not allowed. Only those terms are there. So therefore, what captive power plants are doing in IT park, what homeowners association is doing, all these cases are amortizing cost of running the plant. Last aspect to mention is pure agency is never possible because there is something called a minimum load factor. If you take, for example, ITPL, the minimum load factor means that you have to pay 5 crores electricity bill every month, whether you consume or you don't consume, because state has earmarked so many kilowatts of power for ITPL. You cannot suddenly say that I don't have Corona time, people are not working, therefore I will not pay. You cannot do that. You have to pay 5 crores or actuals, whichever is lesser, whichever is more. So then what happens? ITPL company will divide this by all the tenants and charge them minimum load factor. Now there is a 5 floors in one of the buildings which is vacant for 3 months, no tenant only. What will happen? This minimum load factor will be divided not by total lettable area, but total let out area. It is 14 rupees normally, but suddenly for 3 months it becomes 16 rupees for other tenants who are occupying. So therefore, please consider conditions in rules 33 are so impossible to fulfill that if anybody says I am under rule 33, they are finished. They are agreeing that it is taxable. Only thing they're saying it is actuals. ITPL can never make a loss, leave alone making a profit. If they make a loss on electricity also, they will end up not satisfying rule 33. To the limited extent the circular allows is, circular may be applicable is, where there is separate meters installed by the DISCOM, which is paid by the association and recouped from the homeowners. See, common area electricity is anyway not to be distributed. It is part of maintenance of the common area. It is individual apartment electricity. If the electricity bill is in the name of the building owner, you know, I'm a tenant. Let's say if somebody is a tenant in a house, and the electricity bill fully is paid by the owner because it is coming in his name and is done RTGS setup is created. In such cases, pure agency reimbursement will only apply, but not in all other cases. So those lease agreements we saw, not relevant. It is severable. It is not enforceable clauses. You cannot enter into agreement for supplying uranium-235. If you don't have capacity legally to supply electricity, you cannot enter into a contract and create this capacity or therefore an obligation. The embargo in section 12 cannot be overcome by inventing distinctions such as supply and trading. Ashte. Any questions? Venu? Sir, any questions, sir?
No questions, sir. So like the circular created confusion and
Sir,
should have
see, it is for some other purpose. We should not
Correct.
take that circular and apply it wherever we feel we can use it. That's the
Yeah.
possibly a mistake we are all making. Little bit of hope you get somewhere, we take that and start cross-pollinating it elsewhere.
Rajesh sir, anything to add before we move on?
No, I think the clarity with which Jatin sir explained is something we need to understand, that only keeping a GST law, GST circular in front, leaving out the allied laws would actually lead us to many confusions. So looking into this Electricity Act, all those things are very relevant. And at the same time, this captive power, one aspect in addition to what Jatin sir did mention, there is something also in the captive, something called as group captive consumption, where the whatever that thing is owned by one of the entity, but consumed by another entity of the group. Jatin sir would like to add anything on that aspect of it? How does
Again, there in IT Park it is allowed. So therefore, we have big challenges in GST on that front, because what is happening is we cannot have fractional ownership of assets. So therefore, one of the legal entities will own the assets, others will contribute towards some adjustable deposit for financing the acquisition of capital asset, and still it is amortization of cost of capex and opex and not sale of electricity.
No, I think Jatin sir, what scenario I'm telling is a little different. Say for the example, there is a factory, steel factory. So they will float a subsidiary company within the shareholding permissible under the Electricity Act to be called as a group company, and that subsidiary company will generate electricity, but it will be wheeled to the parent company, and parent company is going to use that particular electricity in its manufacture.
True. So what is happening is, if you see that example we can think of is in public domain is that Jindal Power, where we went for advance ruling in Karnataka to say that whether it is a sale of power. Advance ruling said no, it is not sale of power. They went to High Court and got the advance ruling quashed. They did not get an alternate ruling, where the subsidiary has a license to sell power to the group. They are permitted to sell. Otherwise, it will be amortization of costs, OPEX and CAPEX.
That is exactly
correct.
Sir, so in case of group captive, can we say that it is a supply of power?
Unless you have a license under 12, you cannot sell power, sir.
Yeah, that's what. So when Rajesh sir said in the group captive, we can sell to the group companies.
Sir, no, sir.
So,
sir, I'll tell you what, 90% license is not granted, because this group captive is permitted on the condition that you don't sell it. The physics of it,
okay.
the physics of it is that, see, when you generate power, there is enormous voltage. There is very less voltage. Now, to transmit
Correct.
it, you have to step up the voltage so that it can reach without significant transmission losses. That's why you have a transformer at the point of evacuation. You will increase it to 11 kVA and then transport it 11,000 volts. All right.
Mm.
You transmit it, and then you'll have a step down transformer to make it usable. Otherwise, all the appliances will get burnt.
Right.
So therefore, if the grid has to allow evacuation of power, then they will give a license. But if you say group captive, you will not have great transmission distances. You will not generate in Ballari and consume it in Whitefield.
Okay. Okay.
If you do that, you have to go through DISCOM, generate in Ballari, transfer it to the grid, then draw from Whitefield and consume the same number of units. If
Got
the
it.
physics of it, if we can relate to it, then the law around it can be very simply understood. Otherwise, we assume that it is stock in trade and it behaves like computers or furniture. You produce it, you sell it, so therefore it is transfer of property. That is not the way it works.
Got it.
Sir,
Sir,
just
one
to
more.
add on, yes,
Sir,
madam,
engineer,
Annapurna
sir.
madam.
Even, sir.
You ಹೇಳಿ.
Sir, actually, the fundamental, long time back, see, this electricity, it is intangible, but yet tangible. Nobody can hold, the normal definition of goods will not work. But what has happened, there is one judgment of the Honorable Supreme Court. It traveled from Madhya Pradesh.
MPSC
Supreme Court-
versus, yes.
Yes, sir, MPSC. There it was clearly held, electricity is a goods. Now, will the same ratio apply even today? Yes, it will apply even today. Now, going little more into the fundamentals. Now, today, there are 4 ways of generating electricity, either coal-fired, what we call as thermal, wind, solar, or hydro. I don't see any 5th alternative here,
Nuclear.
as of now.
Nuclear.
Nuclear also, yes, you're right, sir. Nuclear is another one. Now, if you go to the GST notifications, we have one entry in notification number 2, CTR. We have one entry in notification 12 also. So now, in Karnataka, if you take, we have KPTCL that generates power. But we have BESCOM, GESCOM, or MESCOM, whatever. There are distribution companies, they only distribute. Now, the fundamental question is, now out of this, whoever, let's say I put up a solar unit. Okay, I generate power, I give it to the grid. Simple case, let's not complicate. Now, I generate power, I give it to the grid. 100%. I give it to the grid. Now, in this situation, whether it is sale of electricity, of course, somebody putting up a solar power plant, you'll have all the permissions, all the requisite approvals, everything you have got under the applicable statutes. Whether it is solar or wind. Now, I generate electricity, I give it to the grid. Now, if we pause here, whether this transaction is taxable or not is a fundamental.
Sir, if I have a transaction of generating power and selling it to the grid, I will be an IPP. So therefore, it is exempt from GST. No ITC.
It is
also.
exempt. Yes, it is exempt because notification number 2, sir. There the clear reason because there is an entry there. Whatever the HSN code, I think madam should tell. This is fundamental. That means across any method of generating the power, I give to the grid 100%. Of course, once I have all the approval. The next transaction will be, let's take KPTCL. They generate and they give it to DISCOMs. No, DISCOMs, they don't generate power, they only transmit, like wheeling and dealing they call. They only transmit the power. Now, transmission of power is considered as a service. That's the reason we find an entry in notification number 12.
Correct.
Now, that exemption is given only to the public sector undertaking set.
Correct.
Not to a private sector undertaking. This is the fundamental.
Correct.
Now, whatever BESCOM is doing, let us say a private party does it. According to me, there is no exemption. There will be a tax on it.
Correct.
And there, essentially, it will be a service only. It will be a service only. Now, the other question that comes is, now let's take a factory. Let's take an apartment complex. In a factory, they put up huge DG sets. And of course, they put up huge DG sets. They use diesel, and through the generator, electricity is produced and used by the factory. They have all the approvals. They also pay the duties under the Electricity Act, whatever percentage, 20, 30, whatever. So in this scenario, it is self-consumed by them only, and they are not supposed to sell it to outsiders. So here it is self-consumed to supply to myself, so there will be no GST. Now, coming to an apartment association, sir, there also they have DG set, but sometimes what happens, there the issue will be, they'll have some kind of markup, sir. Like one case we have seen, somebody else is generating electricity through solar power panel, and from there it comes to the association. Again, step up, step down, all those things will be there. And sir, Jatin sir, just a little correction, there are capacitors that can hold electricity, but not for long. There's a limit. Unlike goods in a godown, even electricity, there are high-end capacitors. Technically, they do hold some amount of electricity. Because generally in this business, immediate transfer sometimes will not happen. So obviously there are capacitors, they hold electricity. Okay, now
Correct.
in this
Correct.
case, the associations, sometimes they receive power. Let's say I receive power at 10 rupees per unit, they add a markup. And then let's say they add a markup of 2 rupees and they give it to the tenants, or they give it to the apartment owners in an association. So here essentially the association is not selling goods. It is essentially a via media towards sale. According to me, this has to be a service. So I just thought, to my understanding, this clarity is needed. Then only we can get into composite supply, the other supplies, standalone, composite, etc. And nowadays, a lot of advanced rulings, sir. Lot of advanced rulings for this CAM, common area maintenance. They are asking to add even electricity. Of course, a lot of advanced rulings only, but we have to wait and watch further, how things will roll out.
Correct.
So I
Thank
thought
you.
I'll just add a little bit.
Agreed, sir. On those points, I stand corrected, sir. Thank you, sir.
Thank
Sir,
you.
I have one more scenario. See, if for example, we have Infosys. Infosys is having additional space, and they put up they lease out their particular space, and there is another person who invests on these solar panels, and they provide, they have been given the authorization by the BESCOM for generation of power, assuming. So then that will be given back to the grid. So in that case scenario, there could be a little thought process. I'm just thinking of an hypothetical situation. I don't know whether it is there or
Actually,
not.
Chandrasekhar, what will happen is Infosys will only get the permission to set up the plant. The investor comes in to finance Infosys project. It is like builder and landowner. All approval is in the name of landowner only.
Okay.
So it is the investor only finances this project for Infosys. They will collect their own whatever is their interest in some shape and form by calling it an O&M contract or something like that. But ultimately, it is Infosys who got the permission, because it is Infosys land, to set up this photovoltaic solar plant, and they will follow gross metering basis and sell the power to the grid. They will not get ITC. The investor who has paid money, he will collect certain, whatever is the published tariff, he will cut and pay, like Zomato, he will deduct 10 rupees and pay balance to CTR.
But say, for example, there is this X company which has invested on this particular thing. So then the entire amount becomes interest only, even though if it is in the nature of number of units wise only, if there is going to be a metering which is being done, the number of based on the consumption units, that is the amount what this person has to bill Infosys then to that extent.
Correct. So what will happen is they will amortize the plant, and they will have interest income.
Oh, okay.
So you see entry 2323A, highway construction, where they invest money in constructing the highway, and they will collect annuity. So there, that's what that Nagar Mukundgad advanced ruling and AAR in Rajasthan also said. Basically, they are saying you are not a contractor, you are a financer of the construction, because you are not selling it. You are collecting annuities.
Okay.
So highway construction is 9954, but people who collect annuity have a turnover under 9965, support services for transportation.
Mm-hmm.
So
Okay.
therefore, that's how it operates.
Okay, sir. Thank you, sir.
Thank you.
Any other points by anyone? Okay. I think we'll move to the second topic. Bhuneshwari madam.
Yeah, I'll start sharing the screen.
Yeah.
Is my screen visible?
Yes, madam. Yes.
Good morning, everyone. The topic of my presentation is conditions on refund on exports under Rule 89 and 96. And the specific points that I have taken up for discussion are: can the power to impose conditions on refund be delegated? Can rules be prescribed even if there is no express provision in the section containing the substantive provisions for refund? And can rules restrict the quantum of refund? So I will be looking at Rule 89.4a, 4b and 89.4c, which has a definition for zero-rated supplies. And whether Rule 89.4a and 4b ought to be mandatorily followed by the supplier when an application for refund is made, or is it optional and can the supplier still opt for filing a refund application under 89.4 formula? And the validity of restriction on the person and not on supply under Rule 96.10, and the impact of the amended section 16.3 and 16.4. We are well aware of the provisions of section 16 regarding zero-rated supply. Subsection 1 defines a zero-rated supply, and subsection 2 provides that notwithstanding the fact that the zero-rated supply is an exempt supply, the supplier is eligible to avail input tax credit. Now, coming to subsection 3, this has been amended by Finance Act 2021, but the section was notified only in July 23 and it has come into effect from 1st October 23. Prior to the amendment of section 16 subsection 3, the provision of section 16.3 provided for a registered person making a zero-rated supply to claim refund under two routes. Either he can supply the goods or services under a bond or LUT, subject to such conditions, safeguards, and procedures as may be prescribed, without payment of tax, and claim refund of unutilized input tax credit. And the second option was he can supply the goods subject to conditions, safeguards, and procedures as may be prescribed on payment of integrated tax and claim refund. The refund has to be claimed in accordance with the provisions of section 54 of the CGST Act and the rules made thereunder. And if we, section 20 contain provisions making the provisions of the CGST Act relating to the matters specified in section 20, which includes refund, demand, and recovery, equally applicable to the IGST Act. And IGST Rule 2 provides that the CGST rules will also apply to the matters listed in Section 20 of the IGST Act. So when we look at CGST Act Section 54, it contains provisions to prescribe rules regarding the form and manner of claiming refund. Subsection 1 provides that any person claiming refund may make an application before the expiry of 2 years from the relevant date in such form and manner as may be prescribed. And 54.3, which contains provisions for claiming refund of accumulated input tax credit, provides that refund of accumulated input tax credit can be claimed only in 2 situations. One is zero-rated supply made without payment of tax, and second is the case of inverted duty structure. And 54.3 contains 2 provisos which provides for situations in which refund of accumulated input tax credit cannot be claimed in case of zero-rated supplies. That is, one, when the goods which are being exported are subject to export duty. And the second situation is when the supplier of goods has claimed a drawback in respect of central tax and claims, or if he has claimed integrated tax refund on making zero-rated supplies on payment of IGST. The first question that I had taken up for discussion was when can the power to impose conditions on refund be delegated? Section 164 of the CGST Act is the section which provides for the power to make rules. Subsection 1 provides that the government may, on the recommendation of the council, by notification, make rules for carrying out the provisions of this act. So this confers wide powers on the government for making rules for carrying out the provisions. And subsection 2 provides that without prejudice to the generality of the provisions of subsection 1, the government may make rules for all or any of the matters which by this act are required to obey may be prescribed, or in respect of which provisions are to be or may be made by rules. So, applying this to the topic of framing rules regarding refund, Section 54 contains an express provision conferring powers to make rules regarding the form and manner of making a claim for refund. And the Section 16.3 prior to the amendment contained provisions regarding the conditions, safeguards, and procedures on making a zero-rated supply either under payment of IGST or making the zero-rated supply without payment of IGST. So the question is, prior to the amendment of 16.3, there was no express provision either under 54 or under 16.3 to frame rules to provide for conditions on refund. And can the government prescribe rules bringing in conditions for refund? If Section 164 subsection 1 is wider in scope than subsection 2, and it provides that it may make rules for carrying out the provisions of this act. So, I'm sorry, I jumped to the second thing before the first one. So anyway, my opinion on whether rules can be made prescribing conditions on refund, even in the absence of an express provision in Section 54 or Section 16, is that under 164 subsection 1, the government has the powers to make rules as long as it is to carry out the object of the act and it is not in contravention of the act. the first question that I had framed was, can the power to conditions be, impose conditions be delegated? I have taken out material from Justice G.P. Singh's book on principles of statutory interpretation. And what it mentions is that power can be delegated subject to one important limitation. The legislature cannot delegate the matter of choosing the policy, and it has to also enact that policy into a binding rule of conduct. Once the legislature has chosen the policy and has also enacted that policy, and if guidelines are also provided to implement it, then powers can be exercised by making the rules. In the Supreme Court in St. John's Teachers Training Institute, it observed that the delegation can be of ancillary or subordinate functions, that is a power to fill up the details. The legislature cannot get into all the details and lay down the statutory provisions covering all the situations. So once a policy is chosen and it is enacted and broad guidelines are provided in the statute, the powers to make rules can be delegated. And it says rules cannot be made to supplant the provisions, but to supplement it. As subordinate legislation, it says it cannot be struck down as arbitrary. It can be struck down as arbitrary if it has failed to take into the account the facts which are expressly provided in the statute, or by necessary implication or required to be taken into consideration. And it also says when we consider the wires of the subordinate legislation, one should start with the presumption that it is intra-vires. And if there is a possibility of two different constructions, one which makes it ultra-vires and other it makes it intra-vires, the courts have to adopt the construction which makes it good. So applying the principles laid down in these judgments, I have come to the conclusion that the power to impose conditions on refund can be delegated, and even if there is no express provision under section 54 or under section unamended section 16(3), empowering making of rules to prescribe conditions on refund, the government has the powers, and it draws the powers from subsection 1 of section 164. The next point that I took up for discussion after coming to the conclusion that the rule 89 prescribed under the rules is within the powers of the government is whether under the rule the quantum of refund can be restricted. Rule 89 sub-rule 4, the formula which is applied to calculate the amount of refund is the net ITC multiplied by the turnover of zero-rated supply divided by adjusted total turnover. When we look at the definition of net ITC, it considers only the input tax credit availed on inputs and input services. It does not consider the input tax suffered on capital goods. Whereas section 16 does, and section 54, subsection 3 regarding refund of accumulated input tax credit does not restrict refund in case of zero-rated supplies only to tax suffered on inputs and input services. Section 54, subsection 3. So the restriction which is there in sub-rule 4 of 89, when it considers net ITC, as only the input tax paid on inputs and input services, will it make 89(4) not according to the provisions of the Act? That is an anomaly in the formula, as it does not consider the ITC on capital goods. So if we look at the judgment of the Supreme Court in VKC Footsteps, in that case also, the anomaly in computation of refund in case of inverted duty structure was argued before the court, and the Supreme Court held that even if there are anomalies in the formula, it will not invalidate a fiscal rule which has been framed in exercise of the power of delegate legislation. So if we apply this reasoning, Rule 89(4), which reduces the quantum of refund by not considering ITC on capital goods, cannot be considered as ultra vires. Now, when we come to Rule 89(4)A, 4B, and 89(4)C, the definition of zero-rated supply, the reason which was recorded in the GST Council meeting minutes, I have produced in this slide, when they, prior to amending the definition of zero-rated supply under 89(4)C, they recorded the reason saying that it is proposed that a ceiling may be fixed for the value of export supply for calculating refund, as there is possibility for taking undue benefit by inflating the value of the zero-rated supply of goods. So the council was basically considering the problems that was faced in case of some of the exporters artificially inflating the value of the export of goods and claiming excessive export benefits. And to curb this practice, they introduced an amendment, and 89(4)C was introduced, where the definition of zero-rated supply was amended to be the lesser of the following two: the value of the zero-rated supply, that is the actual value as declared by the supplier of goods, or the value which is 1.5 times the value of like goods domestically supplied by the same or similarly placed supplier as declared by the supplier, whichever is less. The question of the validity of 89(4)C came up before the Karnataka High Court, and the Karnataka High Court held it struck down Rule 89(4)C, the definition of zero-rated supply, restricting the value of zero-rated supply to 1.5 times the value of domestically supplied goods. It held it illegal, arbitrary, unreasonable, irrational, unfair, unjust, and ultra vires. The arguments placed before the Karnataka High Court, and which was considered by the Karnataka High Court to give this ruling, was that the intention of the legislature is to make the export of goods free from taxes, and rules cannot whittle down the benefit and burden the exporter with an element of tax. And they also argued that it is violative of Article 14 and 19(1)(g). They said that the quantum of refund is restricted only in cases where the exporter has made supply without payment of tax and is claiming the refund of accumulated input tax credit, whereas there is no such restriction restricting the value of the zero-rated supply in case of the exporter who is making that exports under payment of tax. And they said there is a discrimination and there is a likes of being treated as unequal. And they also said that if the rules put any limitation, then the petitioner's right to claim refund, which is conferred under statute, is being whittled down. It is being diluted. And there were also other arguments saying the words like goods, similarly placed supplier and all not defined. And it also does not cover a situation where the exporter has no domestic supply of goods. And it was argued that a rule being a machinery provision cannot take away the right under the Act. They said that the rule is going against is violating the provisions of the Act, and there was no rational nexus with the objective that was sought to be achieved by amending the definition of zero-rated supply. The court also held that can't arbitrarily bring this condition on all the exporters. It can't be a safeguard measure that has been implemented. If there is a misuse, then every such misuse has to be ascertained and verified before asserting that there has been misuse. And reasons for amendments based on possible misuse without adequate defining data cannot countenance as having a reasonable basis. So when we consider the reasons advocated before the High Court and considered by the High Court in striking down the definition of zero-rated supply contained in C of Rule 89.4 and compare that with the provisions of 89.4A and 4B, I find that there is an intelligent differential which is there in 89.4A and 4B. We cannot say there is unequal treatment. Basically, only the exporters who have claimed benefit of certain specified notifications are required to follow the formula prescribed in 4A and 4B. And they form a distinct class as compared to the exporters who are claiming refund of accumulated input tax credit who have not claimed the benefit of the specified notifications. So, and the next question is there a rationale for introducing 4A and 4B? 89.4A and 4B was introduced when Rule 9610 was first introduced, and whenever 9610 was undergoing amendments, similar comparable amendments were made in 89.4A and 4B. And the reason which was placed before the GST Council meeting was that while claiming refund of accumulated input tax credit, the exporters were also utilizing the input tax on supplies pertaining to the domestic supplies and claiming refund of that. And to curb this misuse, 89.4A and 4B was introduced. And the formula which is prescribed under 4A and 4B does not take away the right of the exporter to claim refund. It only provides that if benefit under the specified notifications have been claimed, then refund of accumulated input tax credit will be granted for inputs and input services used in making such zero-rated supply. So I think I arrived at the conclusion that 89.4A and 4B are in accordance with the provisions of the Act. We cannot say that there is a discrimination, and it does not take away the right which has been vested in the Act. And I concluded that 4A and 4B are intra-virus and they are cannot be held ultra-virus. The next question that I considered was whether an exporter who has claimed benefit of these notifications, when he makes a claim for refund of accumulated input tax credit, can he make a refund under applying the formula under 89.4? And the formula prescribed under 4A and 4B, are they optional? the reason why that question came up for me to look at that is when we look at Rule 89 4A and 4B, it says refund of input tax credit availed in respect of other inputs or input services used in making zero rated supply shall be granted. So the wording is not that an exporter who has made supplies without payment of tax under LUT is eligible to apply for accumulated input tax credit by applying the formula under 89 4A or 4B. So is it optional or is it mandatory for the exporter to apply under 4A or 4B as the case may be? So again, I relied on my understanding of the content in the book of Justice G.P. Singh and looked at Hayden's rule, which says that you have to look at purposive construction and the mischief rule. When material words are capable of bearing two or more construction, we have to consider what was the law before making the act, what was a mischief which the law earlier did not provide for, what is a remedy that the act has now provided, and what is the reason for the remedy. Though this Hayden's rule, the rules laid down are talking about the act, I came to the conclusion, mentors have to correct me if my conclusions are correct or incorrect, that this rule will equally apply for interpreting the rules which have been prescribed. So to sum up my understanding of Rule 89, in particular 89 4A, 4B, I concluded that the rules prescribed quantifying the refund because there has to be a machinery provision. Otherwise, the quantum of the refund to be claimed in case of accumulated input tax credit, especially when an exporter is both into zero rated supplies and taxable domestic supplies, will pose a problem. And even if there is no express provision under the section providing the substantive provisions for refund, rules can be made. And the rules can prescribe conditions to implement the provisions of the Act. And even if there is an anomaly in the formula under 89.4 as far as it does not consider the tax paid on capital goods, just because of the anomaly going by the judgment of the Supreme Court in VKC footsteps, the rules 89.4, 4A and 4B cannot be considered as ultra virus. And I have differentiated the judgment of the Karnataka High Court on 89.4C as against the provisions of 89.4A and 4B. Next, I looked at Rule 9610. Rule 9610 basically contains provision that a person who has claimed benefit of certain specified notifications, such as a refund of GST paid on deemed exports, 0.1% concessional rate in case of merchant exports, and exemption from IGST for import of inputs under advance authorization, he will not be eligible to claim refund of integrated tax. So after the Rule 9610 has come into effect, if a person has claimed exemption from GST or refund of GST under the specified notifications, refund of accumulated input tax credit is the only option that is available. Section 16(3) prior to the amendment, which is coming to effect from 1st October, provided for conditions, safeguards, and procedures to be made on making a supply on payment of IGST. Since 16(3) prior to the amendment provided for conditions to be made for making zero rated supply on payment of tax, Rule 9610, which provides that if a person has claimed benefit of these notifications, it can be considered as exercise of powers which were there in the subsection prior to the amendment. But the question is, the restriction is not on the supply that has been made in which the inputs on which the benefit of these specified notifications have been availed or restricted from a claim of refund of IGST, but the embargo is on the person. If the person has availed the benefit of this notification on any single supply, even if such input has not formed part of that zero rated supply, the wording of 9610 makes the embargo applicable to him. So can this restriction prior to the amendment of section 16 subsection 3 be placed on the person and not on that zero rated supply? So can 9610 be read down to make it applicable only on the supply in respect of which the benefit of the specified notifications have been claimed? Okay, this is a question I have on 9610, that is prior to the amendment. It seems while before the amendment of section 16(3), there was a provision in the Act to provide condition for making a supply on payment of tax. 9610 is placing the condition on the person and not on the supply. After the amendment of section 16(3), now earlier section 16(3), the provisions are now in subsection 3 and subsection 4. Subsection 3 contains provisions relating to claim of accumulated input tax credit when a zero rated supply is made without payment of tax. And subsection 4 now contains provisions regarding making a zero rated supply on payment of tax. The present subsection 4 reads as, the government may, on the recommendation of the council and subject to such conditions, safeguards and procedures, by notification, specify a class of persons who may make zero rated supply on payment of integrated tax and claim refund of the tax so paid. And the second situation is, it may by notification specify a class of goods or services which may be exported on payment of integrated tax, and the supplier of such goods or services may claim the refund of tax so paid. So after the amendment has come into effect from 1st October, 2 notifications have been issued. In the first notification, the government basically notified that except for a small list of goods which is prescribed in the notification, the exporter of all other class of goods may export the goods on payment of integrated tax and claim refund of integrated tax. And the second notification 5/2023 was notified, which amended the substantive part of the notification as under. Said that it retained the first part, all goods or services except the goods specified in column 3 of the table as class of goods or services which may be exported in payment of integrated tax, on which the supplier may claim refund of tax so paid, and all suppliers to a developer or a unit in SEZ undertaking authorized operations. So after the introduction of this subsection 4 to section 16, 2 notifications have been issued. Under these notifications, all the suppliers of goods other than the small list of goods which is prescribed in the notification can export the goods on payment of IGST and claim refund. And as far as the class of persons is concerned, all the suppliers to a developer or a SEZ unit can make zero rated supply under payment of IGST and claim refund. So what about the validity of 9610 after the amendment to section 16 subsection 3? Will 9610 fit in under any of these two classes? Can it come under class of persons who may make it is a positive provision here under 16.4 as the class of persons who are permitted to make zero rated supply. And 9610 basically says a registered person who has claimed benefit of those notifications will not be allowed. Can we read it that all suppliers other than a supplier who has availed the benefit of these prescribed notifications may make zero rated supply on payment of tax and claim refund? Again, the question is there can be cases where for one zero rated supply, the supplier would have claimed benefit of the specified notification, whereas for another, he might not have claimed the benefit of an exemption from GST or refund of GST. Still, can a Rule 9610 provide a restriction preventing him or taking away his right to make zero rated supply on payment of GST and claim refund? Can 9610 prior to the amendment of 16.4 be read down to make it applicable only for the supply in which the benefit of those notifications have been claimed and not the restriction on the person? Again, I have taken material from Justice G.P. Singh's book, and it says that when a part of the subordinate legislation is admittedly ultra-virus, the question arises whether the remaining part can be severed from the invalid part and upheld as valid. The question of severance so arising has not to be solved simply on blue pencil basis, but on consideration whether deletion of that which is in excess of the power so alters the substance of what is left that it becomes in reality a substantially different provision from that which it was before deletion. So this is on deletion. I am considering whether the provisions of 9610 can be read down. And I really could not come to a conclusion on the validity of 9610 prior to amendment of section 16 and post amendment of section 16. My opinion from the limited understanding that I have is that Rule 9610 prior to the amendment can definitely be considered as valid, but courts may read it down to make it applicable only for the supply where the benefit of the specified notifications may be availed. And what is the position after the amendment of section 16? The amended section 16 anyway contains an express provision empowering the government to prescribe conditions and specify class of persons who may make zero rated supply. And under the amended provision, Rule 9610 may well get covered. And the next point that I took up for discussion is Rule 96B. Rule 96B was inserted with effect from March 20, whereas the proviso to section 16.3 was notified and it came into effect from 1st October 23. Rule 96B provides that if an exporter who has claimed refund has not realized the export proceeds within the time period prescribed under FEMA, then the refund has to be recovered along with interest. But this Rule 96B was inserted even before the proviso to 16.3 came into effect. Can we consider the provisions of Rule 96B as going beyond the object of the Act? Then the intention of the government is to encourage exports so that foreign exchange flows to the country. And when there is no realization which is happening, I feel that it is within the object of the Act to make rules to provide for situations when the benefit of zero rated supply, such as providing refund of accumulated input tax credit, can be denied. But after my having come to the conclusion that Rule 96B is valid and it is within the provisions of the Act, I was unable to understand why the section 16 is now amended and the proviso has been inserted in section 16. Is it a clarificatory amendment, or is it an amendment, substantive amendment, which is coming into effect from 1st October? And interestingly, this condition regarding ineligibility to claim refund or recovery of refund when there is failure to realize the export proceeds is not there in the amended in the section 16 subsection 4. There is a proviso containing this condition in subsection 3 and no such condition in subsection 4. Whereas in Rule 96B, which was inserted prior to the amendment to section 16, covers situations of both refund of accumulated input tax credit as well as exports on payment of IGST and claiming refund of IGST. So what is the impact on Rule 96B because of the amendment of section 16? I could not come to any conclusion on this Rule 96B after the amendment to section 16 of the IGST Act. I would like to have the views of this forum.
Thank you, madam. Any comments from anyone? Jatin sir, anything to add?
Only one point, sir. Madam, one question for you. When you decided to use Hayden's rule, how did you eliminate literal rule?
So literal rule.
In that context, how did we first eliminate literal rule as not applicable before going into Hayden's rule?
I only considered the object of introducing section 4A, rule 89 4A and 4B.
Where did you get it from?
From the GST Council meeting minutes.
Is it binding?
It is not binding, but what is the reason for introducing 4A if anyway the exporter can claim refund under 89.4? If 4A or 4B is not there, even the exporter could have claimed refund and the revenue would have granted refund. So what is the object of introducing 4A and 4B to say that the refund shall be granted? If rule 4A or 4B is not there, refund would have been denied? So
there's a little bit of danger that we are introducing some logical explanation, which is extra legislative. That one hurdle we should overcome.
Okay. So what are your views, sir?
No, that's the part I didn't get from the presentation. That's the only question I had.
Okay, so what are your views? Do you feel that 18940 and 4B need not be mandatorily followed by the exporter of goods?
But what rule of construction can be followed to say something like that? Can something general prevail over something specific?
No.
So when something specific is there, is it optional?
No.
So there you have your answer.
Okay, so I don't have to go to Hayden's rule. It is a specific provision, and so specific provision will prevail over the general provision.
Correct.
Okay, even though 18940 and 4B says refund shall be granted, the exporter has to make that application for refund under 4A and 4B only, and not
Correct.
under 18940.
I'll give a contrast or an example to highlight this point. All registered persons are liable for penalty under 122(2). If you're registered, then 122(2) is the section for you. A registered person involving in fake billing, can he say you have to give penalty under 122(2) and not under 122(1)? Here, can you see how we identify which is more specific and which is more general? If we say the person is relevant, then 122(2) becomes specific, 122(1) is general, because 122(1) covers taxable person. But if you look at the nature of the offense of fake billing, the ingredients of 122(1)(2) and 1(7) are more specific than 122(2), which is more generic. So specific and generic has to be examined from the context. Once it is decided that fake billing is the context, 122(1) will become more specific. Department cannot say you are liable to penalty as per Act, because both 1 and 2 can apply. So therefore, your defense in those cases will arise from unintended mistake. We have one case where they have issued penalty under 74(1), which means it is traceable to 122(2)(b). So we said that you are only admitting in your notice that there is no fake billing. Ultimately, if there is a murder and the person is only charged with kidnapping, then you're saying that there is no murder, or this person has not charged with murder. So we have to be very careful while choosing specific over generic. So you can consider the context and you will get the answer, I suppose.
Okay, so not in this context, generally, the Hayden's rule will apply even for interpreting the rules, or is it only for interpreting the Act?
I don't think it is limited to the statute, but Hayden's rule can be used only after demonstrating that literal rule will result in absurdity in almost all instances, because there could be some instance where it will cause absurdity. So those should be what's called ironing of the creases. But if we can show that the literal rule is simply not possible, that's when we'll have to go into Hayden's rule.
Sir, and your views on 9610 validity prior to amendment and post amendment, and also 96B?
See, if we read this as a condition, then there is no vested right in matters of procedure. There is no vested right in matters of procedure, so it will apply to all transactions retrospectively prior to 23 to 2020 for 96B and 9610 also. And clearly from the sequence of amendments that are being made, what is the reason why somebody will overvalue, somebody will undervalue, etc. is irrelevant. Once they introduce it into the rule, there's no vested right in the procedure. So all transactions that can be covered by 9610 will get covered. So effectively, it will get retrospective operation because it is a matter of procedure.
So why did they insert a proviso for subsection 3, but there is no similar condition in subsection 4.
They're asking me some this very. I will see. 89 and 96 3.
No, sir. Section 16.3 and 16.4 of the IGST Act. 16.3 now has a proviso.
Right.
Okay, where it says that in case of non-realization, then a refund shall be recovered. Whereas 16.4, which is the subsection which covers a situation of refund of IGST paid, does not have a similar provision. So here, the amended section 16 subsection 3 proviso says, provided that the registered person making zero rated supply shall, in case of non-realization of sale proceeds, be liable to deposit the refund. So receive. So this is like the rule 96B.
Okay.
When we come to the 16.4, it only says the government may okay, is it because there is in subsection 4 a provision for making conditions and it gets covered under 96B?
See, 16.3 and 16.4 are not mutually exclusive, covering the same transaction, isn't it? 16.3 deals with more specifically what will happen in such cases, isn't it? Where refund is obtained and so on. 16.4 deals with notifying those class of persons or class of supplies where payment of 96 rule will be not permitted. Do you see a conflict between these two subsections?
Not a conflict, but I see a specific provision introduced in the Act for recovery of refund in case of non-realization where refund of accumulated input tax credit has been claimed. What is the need for this proviso?
You are saying this proviso is not needed.
Because Rule 96B was notified prior to Section 16 coming into effect. Rule 96B anyway covers the situation of recovery of refund in case of non-realization, in both cases, refund of accumulated input tax credit as well as IGST. So why this proviso in Section 16 and only under subsection 3?
Where should it have been? I'm not following you because see, 3 is substituting an earlier 3 that was there. The earlier
Yes.
basically said that shall be eligible to claim refund. He may supply goods under bond or he may supply goods on payment of tax in accordance with 54. So they have replaced that to say that only this situation is allowed.
Sir, I'm presenting that amended subsection 3 on the screen.
Yeah.
Earlier 16 subsection 3 now is substituted with two subsections, subsection 3 and subsection 4.
All right.
Subsection 3 is on supplying without payment of tax and claiming refund.
Okay.
And subsection 4 is on paying IGST on supply and claiming refund.
Okay.
And the proviso containing recovery of refund has been placed under subsection 3.
But because in subsection 4, such a proviso may not be relevant, no? Because you're paying and you're claiming back.
But the export proceed realization can apply even in cases where you are paying IGST and your claim refund.
So you're considering that in case of payment of tax route, what if you don't receive foreign exchange? If it is services, it is covered by definition of export of service itself. Correct, no?
Yes, sir.
If you export services and not receive the payment, it is not even export.
But we have a proviso to refund the IGST refund, madam.
Madam, I still didn't follow your observation here. I can somewhat see that you're saying this proviso should also be under 16.4.
Yes,
Are you
sir.
visualizing a situation where someone will pay IGST, get the refund, and not get the foreign exchange?
But 96B will be taking care of that, no, ma'am.
96B covers both situations, and 96B has been in effect right from 2020.
So can we say that your grievance is about the inelegant drafting?
Yeah, I wanted to know whether there is anything more.
See, proviso does justice to subsection 3. You are satisfied there?
Yes, sir.
So with the proviso in subsection 3, you don't have a challenge. Your concern is under subsection 4, why there is no such proviso?
Yes, sir.
It would have been more elegant if that proviso was there, but whatever a proviso could have accomplished is being accomplished through 96B. Do you feel that on payment of tax, 96B will not apply?
No, it will apply.
So then basically your grievance is this act has not been drafted by Shakespeare. The
No.
language is very poor. Is that therefore the grievance?
I did, as a person who is just in LKG, I did not come to that conclusion. I wanted to find out whether there is a deeper meaning and implication for that proviso only there in subsection 3 and not covering subsection 4.
So then we will defer to everyone to share their comments on whether the absence of proviso in 16.4 can be differentiated to get overcome 96B.
Yes, sir.
Madam, consider one point. What if this proviso was not there in 16.3?
If the proviso was not there, anyway, Rule 96B has been there right from March 20, and I came to the conclusion, I'm of the opinion that 96B is as per the provisions of the Act. It does not defeat the object of the Act.
So then can we say that in order to avoid any dispute that 96B is substantively altering the entitlement to refund and there is no direct statutory provision that 96B can be traced into, for that reason a proviso has been inserted?
Yes, sir. But okay, sir. Why such an inordinate delay in notifying the section of Finance Act 2021? It has been notified only in July 23 to come into effect from 1st October 23.
All high level asking, madam. Connected people who are connected with the decision makers should answer. Venu sir, neeve. No, you're right, madam. The delay itself is very suspicious. But if you consider the amendment here in 16.4 already resides in proviso to 89.1, Rule 89.1, to say that you get a specified officer's endorsement. Like other suitcase circulars, this delay allows lot of SEZs who have not got those endorsements to overcome any potential liability. If this had got notified earlier, there would be far greater non-compliance by corporate India. So my only view is that this is very mischievous that they have delayed to give industry time to quickly start this endorsement business, because this endorsement was there in Rule 89 itself. and those who claimed refund were asked to produce endorsements, but those SEZs who claimed ITC said it is only for refund I will need endorsement. Without refund, I don't need this endorsement, and they were fighting with that. I think 16.4 in IGST and the amendment in 16.1b was what was originally intended, because use in other than authorized operations anyway violates SEZ Act section 6 and 26. Anything purchased for use in non-processing zone. See, we always think about IT SEZ. If there is a iron ore SEZ exporting iron ore, inside the SEZ, they will have a hospital, they will have a school and a cinema theater. That is part of the non-processing zone. Can you get furniture for the cinema theater in the non-processing zone and claim ITC for iron ore exports? Answer is no, because that is not the scheme of SEZ Act. 16.1b, 16.4 were all fatal omissions made in the drafting of IGST law. And now they lack courage to give retrospective effect to it, because it's not the MSME segment who will get affected. It's the large players who will get affected. So therefore, it has been brought into effect, and the date of notification is very motivated so that as many of the large players are able to set right their process to get endorsements. If you notice in development commissioners also, not every development commissioner has given that online system of endorsement of invoices from 2017. That whole online endorsement business only got rolled out much later. So to accommodate SEZ's preparedness to do this endorsement business also can be one of the reasons for this delay. But again, these are all my observation. I don't have any tangible document to support this.
Thank you, sir.
Thank you very much, sir. Yeah. With this, we'll conclude the session for today, sir. Thank you.
Thank you, madam.
Thank you.
Thank you.
Bhuvneshwar, madam, you have to press the end button.
Thank you.